Hi, this is Mike Palmer with Group 1 Trading, and this is the Investitude Volatility Sonar Report. We are right now still in a very low environment when it comes to volatility. We actually have seen the market stay within a 1.5 percentage point range in the S&P 500 for 30 days. That's the first time that's happened since 1965 that the market has stayed in such a tight range for a 30-day period. Accordingly, we've seen the VIX trade in the 12s. Right now, it's actually just a little bit above 13, with the S&P 500 down about 6 points today. So we're definitely seeing a very low volatility. We're also seeing a very low volatility of volatility. That is, the VIX index itself hasn't been swinging very much because the market's not swinging very much. That said, we do see some trades out there that are general hedging of volatilities. Today we saw a buyer of the September 30 calls. They paid a dime for 14,000 of those. It would take a pretty big sell-off to get the VIX above 30. But it is definitely looked at as cheap protection right now. Now, today is August 30th. It's important to remember we have 3 more weekly expirations before we get to that regular VIX September expiration. That is, tomorrow is August 31st, then we have the 7th, the 14th, and then the regular serial VIX expiration on the 21st. What is interesting about the following settlement is that we're going to have a 3-day weekend for Labor Day weekend. That means that Tuesday, the 6th, when we get back in September, there will be 1 day left in that weekly class. So that's going to be 3 days of decay, 1 day of trading, and then into that weekly settlement on September 7th. So that'll create some interesting trading around there. The rest we're seeing, and this is very typical of a low volatility environment, is people start trading the Contango. And the idea with the Contango is the futures slowly roll down. So you would do something where you try to get short that October future at this point, that second month out. You'd sell some October future, and hopefully it would roll down into the lower environment, volatility where it is trading now, somewhere near where the September future is, or even some of the weekly futures, which are lower than that. And so what we've seen today is a big buyer of the September 15-13 put spread. They bought about 5,000 of those, and also a big buyer of the September 20 puts. These are people getting short that October future through options, and hopefully and seeing that we'd roll down in Contango and the market would remain quiet all the way into the middle of October. So low vol environment means people trade the Contango. It also means the volatility is very low in and of itself, and that's what's going on here in the VIX. This is Mike Palmer, Group 1 Trading, and this is the Investitude Volatility Sonar Report.